touch base with Geoff Lewis, Senior Strategist at MAM Macro Strategy and Research, Manulife Asset Management. Geoff, great to have you on the show. Thanks very much for taking out the time. Most influential investors across the world are calling for a strong rebound in emerging markets this year, coming off from a low base last year because they were so oversold. Do you agree?
Well, I think we're seeing signs of that. I think this is a bounce from oversold levels. I think investors panicked in the fourth quarter of last year, and markets were almost pricing in a near-term recession. We think that's unlikely, and we think that the growth differential will move in emerging markets' favor. So in the short term, yes, I think we'll see some recovery in the emerging markets.
Geoff, hi there. Good morning. Let's talk about the overall valuation picture. You believe that it's far more attractive than what we witnessed at the beginning of 2018. What explains the overall valuation thesis?
Well, I think at the beginning of 2018, investors were convinced there was going to be strong synchronized global growth, and valuations were at levels which were relatively rich. Now, what we've had is a year of a strong global economy, strong corporate earnings, and yet markets have been flat to down significantly. So obviously, valuations have come down quite a lot. So it could just be that 2020 will be the year where perhaps the global economy does less well, but markets nevertheless rebound. I think that's quite possible.
What's the stance that you're expecting in terms of a recession in the United States? You know, how much of a possibility do you see that, and what do you believe will be the overall trickle-down effect if we do?
Well, this has certainly been in the headlines so much in recent months. We still see very little evidence. The indicators that we look at, most of those based on hard data like the Chicago Fed National Activity Index or various factor models, and these show very little chance of recession. What is showing us a higher probability are some of the models which include financial variables like the yield curve, but we think those are biased in this environment, and we certainly think that surveys like the Duke survey of CFOs, which suggests a 50% chance almost a recession, that's really showing some panic. I think maybe the chief financial officers were too close to their own share price.
What about India's outlook within EMs?
Well, I think India held up well last year. It showed that it is relatively defensive in a trade friction environment with the only major markets in the EMs. I think that was up positively in local currency terms. Of course, it suffered because of the currency. But as long as the oil prices behave and as long as the parties ahead of the election don't promise too much in terms of populist policies, I think the outlook for India looks pretty good.
Pretty good for sure, but relative to the rest of the region, within the pecking order, where would you place India?
Well, that's a good question. I think tactically, the China markets, Korea, etc., have sold off an awful lot, so they look particularly cheap. So if you're looking for a rebound from oversold markets, I think those are more attractive. But in terms of the long-term view, the secular growth story in India is there. Elections have they've contributed to some volatility, a dip in the few months ahead of the election and then a rebound after. So I think foreign investors will not be too concerned. And also the stock market in India has done well under coalitions or under a Congress-led government in the past. So I think we're seeing a rebound in private sector investment. So I think India stands a chance of sustaining 7.5% growth in the next few years without inflation. So all in all, I would say India deserves to be quite high up in the pecking order.
Just one follow-up on China. You know, the world is obsessing with China's slowdown currently, coming in closer to 6%. I know their last reported numbers were 6.6 for the full year and 6.4 for the fourth quarter. My only question there is, isn't China a buying opportunity if we've seen the worst of the economic readings thus far? Because we've been here many times in the past as well, where, you know, concerns about China's debt, concerns about how consumption patterns were slowing in China have made investors wary. Do you think in this transition or in this down cycle we've seen the worst, or will the trade deal peg China back lower? In which case, of course, investors will want to wait and watch out for a better buying opportunity into the region.
Well, putting trade concerns to one side, then I think that's right. China approved more infrastructure projects in December than for the previous 11 months in 2018. So they stepped on the brakes too hard in the first half of last year. It's taken them a while. I don't think we're going to see a massive fiscal stimulus, but we will see more stimulus measures coming, perhaps a VAT cut in around April. And that should be enough to see the China economy first stabilize in the first half of the year and then begin to improve in the second half. So on that basis, with given how far share prices have fallen, then China is, in my view, a clear buying opportunity.
Coming right back to the overall Indian markets, how do you see the big event of the election as well playing out? What is the expectation from the budget? Because word is that it could be fairly populist in nature. And how do you believe the Indian equity markets are going to react to this big event? Will the first half of the year be very different from the second, given that the big event will be out of the way?
Well, it is a huge event, obviously, and I think after losing a number of key states in the December state elections, it's certainly a wake-up call for Mr. Modi. So I think it's going to be closely fought. I believe that he's probably done enough in terms of economic reforms and so on to deserve a second term. Whether that will actually work out, I'm not so sure. I think both sides now are looking to the fact that real incomes have fallen for rural workers, and they both have policies to do something about that. So I think it's going to be a close fought race. But whichever side wins, I think foreign investors are more interested in the longer term, the secular growth story in India. And I think that is looking pretty good in terms of the economic fundamentals.
All right, point taken. That's the view coming in on India, the other emerging markets, as well as the global outlook.